Good day, students. Our topic for today is all about property, plant, and equipment. Our main objectives for today are to know the definition of property, plant, and equipment, to know how to recognize and measure property, plant, and equipment, and to know the different methods of acquiring such properties. Also, we have additional objectives such as to know how to recognize property, plant, and equipment, and to know the different methods and treatments of fully depreciated property, properties classified as held for sale, and idle or abandoned property. Am I right, partner?
Yes. So when you hear the word PPE, what comes into your mind?
Land?
Correct.
Building?
Correct.
Machinery?
Correct.
Ship, aircraft, furnitures and fixtures, office equipment, leasehold improvements, book plates, molds and dies, patterns, etc.
Correct, partner.
Yes.
Anyway, so all those mentioned are considered as property, plant, and equipment.
Property, plant, and equipment is the long-term or non-current asset section of the balance sheet. Included in this classification are land, buildings, machinery, office equipment, vehicles, furniture, and fixtures used in a business. How do we recognize property, plant, and equipment? An item of property, plant, and equipment shall be recognized as an asset when it is probable that future economic benefits associated with the asset will flow to the entity and the cost of the asset can be measured reliably.
How do we measure property, plant, and equipment at recognition and after recognition?
At initial recognition, an item of property, plant, and equipment that qualifies for the recognition as an asset shall be measured at cost. At initial recognition, the cost of the fixed asset may be equal to the cash payment or equal to the fair value of other consideration given to acquire the asset, such as notes payable or bonds payable. Subsequent measurement of the property, plant, and equipment may be determined either by using the cost model or the revaluation model as the accounting policy for property, plant, and equipment, and the chosen accounting policy must be applied by the entity to the entire class of property, plant, and equipment.
First method is the acquisition and cash basis. The cost of item of property, plant, and equipment is measured at cash price equivalent. The cost of asset acquired on a cash basis simply includes the cash paid and the directly attributable costs such as freight, installation costs, and other costs necessary in bringing the asset to the location and condition for the intended use. Moreover, if several assets are acquired at a basket price or lump sum price, it is necessary to apportion the single price to the assets acquired on the basis of relative fair value. For example, land and building are acquired at a single cost of 5,500,000 pesos. At the time of acquisition, the land has a fair value of 1 million and the building 4 million. Accordingly, when several assets are acquired at a basket price or lump sum price, the single cost of 5,500,000 will be allocated to both land and building on the basis of relative fair value. The 5,500,000 will be multiplied to 1 million over 5 million pesos, which is equal to 1,100,000 pesos, the allocated cost for land, and the remaining 4,400,000 pesos will be for the building. The second method is the acquisition on account. When an asset is acquired on account subject to a cash discount, the cost of the property is equal to the invoice price minus discount regardless of whether the discount is taken or not. If the discount is not taken, the same is charged to purchase discount loss, which is shown as other expense. Moreover, cash discounts are generally considered as reduction of cost and not as income. For example, an equipment is purchased for 100,000 pesos to 10 and 30. The purchase may be recorded using either the gross method or net method. So let's begin with the gross method. The journal entry to record the acquisition is to debit equipment and credit accounts payable for 100,000 pesos. The journal entry to record the payment within the discount period is to debit accounts payable for 100,000 pesos, credit cash 98,000 pesos, and equipment 2,000 pesos. This 2,000 pesos will serve as a discount taken by the customer. The journal entry to record the payment beyond the discount period is to debit accounts payable for 100,000 pesos, purchase discount loss 2,000 pesos, and credit cash 100,000 pesos and equipment for 2,000 pesos. If the discount is not taken, the same is charged to purchase discount loss account, which is shown as other expense. Next is the net method. The entry to record the acquisition is to debit equipment and credit accounts payable for 98,000, which is net of the 100,000 pesos. The entry to record the payment within the discount period is to debit accounts payable and credit cash for 98,000 pesos. Lastly, to record the payment beyond the discount period is to debit accounts payable for 98,000 pesos, purchase discount loss 2,000, and credit cash 100,000. Observe that the asset may initially be recorded at gross or at net, but ultimately, the recorded cost should be the net amount. Third method is the acquisition on installment basis. When payment for the item of property, plant, and equipment is beyond normal credit terms, the cost of the asset is recorded at the cash price equivalent. In other words, if an asset is offered at a cash price and at an installment price that is purchased at an installment price, the cost of the asset shall be recorded at the cash price. The excess of the installment price over the cash price is treated as an interest expense to be amortized over the credit term. For example, a machinery is purchased at an installment price of 350,000 pesos. The terms are 50,000 down and the balance payable in 3 equal annual installments. The cash price of the machinery is 290,000 pesos. A promissory note is issued for the installment balance of 300,000 pesos. The journal entry to record the acquisition of the machinery is to debit machinery for 290,000 pesos, which is equal to the cash price equivalent, and debit discount on note payable for 60,000 pesos. This is the excess of the installment price of 350,000 pesos over the cash price of 290,000 pesos. Credit note payable 300,000 and cash for 50,000. The entry to record the first installment payment is to debit note payable and credit cash for 100,000. Lastly is to amortize the discount on note payable. Interest expense and credit discount on note payable for 30,000 pesos. The fractions are developed from the note payable outstanding each year. The fractions are then multiplied by the discount of 60,000 to arrive at the annual interest expense. So for the first year, 60,000 times 3 over 6, which is equal to 30,000, which is the interest expense for that year. Fourth method is the issuance of share capital. Accordingly, where a property is acquired through the issuance of share capital, the cost of the property shall be measured at an amount equal to the following in the order of priority. First priority, fair value of the property received. Second priority, fair value of the share capital. Third priority, par value or stated value of the share capital. For example, a piece of land is acquired by issuing 20,000 shares with par value of 50 pesos. At the time of acquisition, the fair value of the land is 1,600,000 pesos and the share is quoted at 90 pesos per share. The journal entry to record the acquisition when the fair value of the land is used is to debit land for 1,600,000 pesos, credit share capital, which is 20,000 shares multiplied with a par value of 50 pesos, which is equal to 1 million pesos, and the excess will be charged to share premium for the amount of 600,000 pesos. When the fair value of the share capital is used, the journal entry is to debit land, which is equal to 20,000 shares times the quoted price of 90 pesos and the excess of 800,000 1,000 pesos, which is charged to share premium. And lastly, when the par value of the share capital is used, debit land and credit share capital for the amount of 1 million pesos, which is 20,000 shares multiplied with a par value of 50 pesos. If all these amounts are given, remember that the measurement of the land using the fair value of the land is preferable.
A fixed asset can also be acquired by issuing bonds payable, and it shall be measured at the fair value of the financial liability plus directly attributable costs, if any.
Accordingly, the asset acquired by issuing bonds payable is measured in the following order: fair value of bonds payable, fair value of asset received, and face amount of the bonds payable. For example, a building is acquired by issuing bonds payable with face amount of 5 million pesos. At the time of acquisition, the fair value of the building is 6 million pesos and the quoted price of the bonds is 5,800,000 pesos. The first priority in measuring the cost of the fixed asset acquired when issuing bonds payable is the fair value of the liability bonds payable. So, in the example, the fair value of the bonds payable is given. Hence, the cost of the building is measured on that amount. Debiting building with 5,800,000 pesos, crediting bonds payable 5 million pesos as it is the face amount of the bonds payable, crediting the residual of 800,000 pesos to the premium on bonds payable. If the fair value of the bonds payable is not given, the second priority to be used in measuring the cost of the fixed asset is using the fair value of the fixed asset if given. So in the example, we debited building with the amount of 6 million as this is the fair value of the building, the fixed asset, and crediting the bonds payable with 5 million pesos and crediting to premium on bonds payable account the residual amount of 1 million pesos. If the fair value of the liability and the fair value of the fixed asset acquired are all not given, the face amount of the liability shall be used. So in the example, the entry comprises debiting building and crediting bonds payable with the same amount of 5 million pesos. It should be noted that if the fair value of the liability, the fair value of the fixed asset, and the face amount of the liability are all given, the measurement of the fixed asset using the fair value of the liability is preferable. In the example, the measurement of the building using the fair value of bonds payable is preferable.
An entity may also consider exchanging an old asset with another entity, a new or better asset. And in exchanging fixed asset, it can be with commercial substance or without commercial substance. But first, what is commercial substance?
Commercial substance is the event or transaction causing the cash flows of the entity to change significantly by reason of the exchange.
If the fixed asset is exchanged with commercial substance, gain or loss may be recognized as the fixed asset is recorded based on the order of priority of the fair value of the asset given and fair value of the asset received. On the other hand, if the fixed asset is exchanged without commercial substance, no gain or loss may be recognized as it is recorded or based only on the book value of the fixed asset. For example,
Petron and Shell are fuel oil distributors. To facilitate the delivery of oil to customers, Petron and Shell exchange ownership of 1,000 barrels of oil without physically moving the oil. Petron paid Shell 1,500,000 pesos to compensate for a difference in the grade of oil. It was reliably determined that the exchange lacks commercial substance because the configuration of the cash flows of the asset received does not differ from the configuration of the cash flows of the asset transferred. On the date of exchange, cost and fair value of oil were. So, Petron should record the oil inventory in exchange at what amount? The problem stated that the exchange lacks commercial substance, and if that is so, the acquired oil inventory is measured at the carrying amount of the asset given. How to get the carrying amount of the asset given? The carrying amount of the asset given by Petron is 5 million pesos. The problem also stated that Petron paid Shell 1,500,000 pesos. That 1,500,000 pesos shall be added to the cost of oil worthing 5 million to get the cost of the new asset amounting to 6,500,000 pesos. Of course, any cash involved is added to the carrying amount on the part of the payer, and since Petron is the payer, it is added on his part. Otherwise, it shall be deducted from the carrying amount on the part of the recipient to get the cost of the new asset. No gain or loss shall be recognized as the exchange lacks commercial substance. If a property is acquired in an exchange with commercial substance and there is no cash involved, the cost is measured at the following in the order of priority. Fair value of property given, fair value of property received, and carrying amount of property given. For example, Beauty Company exchanged used equipment for another equipment of Beast Company. The following information pertains to the exchange. How are we going to account or how are we going to record this in the books of Beauty and Beast Company? Ang fair value sa equipment sa duha ka entities kay given. So, base atong priority na gihatag sa standard, gamito na to una ang fair value sa asset given. So, sa point of view ni Beauty Company, ang pag-recognize niya sa equipment na iyang nadawat kay equal sa fair value sa equipment na iyang gihatag. Ang fair value sa equipment na iyang gihatag is worth 500,000 pesos. Hence, ang equipment new is recorded at the amount of 500,000 pesos. Sa part naman ni Beast Company, ang value sa equipment na iyang gihatag is 450,000 pesos. Mo nang ang iyang gidebit sa iyang equipment new account is 450,000 pesos. Note that if the exchange has commercial substance and is measured at fair value, any gain or loss on exchange is fully recognized. If a property is acquired in an exchange and there is a cash involved, the cost of the property acquired is equal to the following. First, fair value of the asset given plus cash payment if on the part of the payer. Otherwise, fair value of the asset given minus the cash received on the part of the recipient. Assuming based on the previous example, Beauty Company paid 150,000 to Beast Company. How are we going to account the equipment received by Beauty and the equipment received by Beast? Using the formula given by the standard, the cost of the new asset acquired by Beauty is equal to the fair value of the asset given, which is 500,000 pesos, plus ang cash payment na iyang gibayad ka Beast nga 150,000 pesos, amounting to 650,000 pesos as the cost of the new asset nga nadawat ni Beauty. On the part of Beast, being the recipient or the payee, ang fair value of the asset given is 450,000 pesos. Bawasan na siya sa cash received nga iyang nadawat gikan kay Beauty amounting to 150,000 pesos. Ang difference ato, which is 300,000 pesos, that is the cost of the new asset that Beast will record on his books. An entity may also acquire fixed asset by means of trade-in. In trade-in, the transaction is participated by a dealer and a non-dealer. The measurement of the fixed asset is based on the priority of the fair value of the asset given plus cash payment and or trade-in value of the asset given plus cash payment. So how do we get the cash payment? Cash payment is equal to the original cost of the asset given less the trade-in value. For example, an entity traded an old equipment with a dealer for newer model. The following information are given. The cost, which is 1,400, the accumulated depreciation, which is 1,000 pesos, the carrying amount is equal to 400 pesos, fair value 350 pesos, the trade-in value 500 pesos, and the list price 2,000 pesos. In order to get the cost of the new asset, we first need to have the cash payment. So the cash payment in the example is equal to the difference of the list price and the trade-in value of the old equipment. So therefore, the cash payment is equal to 1,500 pesos. Using the first priority, which is using the fair value, the cost of the new asset is equal to the sum of the fair value of the asset plus cash payment amounting to 1,850 pesos. Of course, we have to recognize any gain or loss on exchange by getting the difference of the fair value and the carrying amount of the old asset exchanged. In cases where the fair value is not given, we have to use the trade-in value in lieu of the fair value to get the cost of the new asset by adding it to the cash payment. Any gain or loss on exchange must still be recognized by getting the difference of the trade-in value and the carrying amount of the asset.
Another acquisition of fixed asset is by means of the donation from the shareholders. The fixed asset is measured by the fair value of the asset received. For example,
a certain equipment was donated by the shareholder to Rebisco. An independent appraisal of the equipment placed the fair value of 2,000 pesos and the residual value at 200 pesos. Attorney's fees and other legal fees expenses amounted to 25 pesos. Accounting for that transaction includes debiting equipment equal to the fair value amounting to 2,000 pesos, debiting also registration expenses amounting to 25 pesos, and crediting donated capital amounting to 2,025 pesos. As you can see, ang registration expenses kay gi-absorb sa donated capital. Why? Because it is said so by the standard. So accordingly, any fixed asset received from the shareholders shall be recorded at fair value. The residual value you saw in the problem shall only be used when the equipment will be depreciated every period.
in the recognition, gain or loss may be recognized, and it is the difference between the net disposal proceeds and the carrying amount of the item. That gain or loss shall be included in the profit or loss. However, it shall belong to the other income since it is not derived from the primary business activities of the entity. What is fully depreciated property?
A property is said to be fully depreciated when the carrying amount is equal to 0 or the carrying amount is equal to the residual value. In such a case, the asset account and the related accumulated depreciation account are closed and the residual value is set up in a separate account.
What do you mean by property classified as held for sale?
A property classified as held for sale is a fixed asset that is ready for immediate sale within 1 year from the date it is classified. The entry to derecognize it or remove it from the class of property, plant, and equipment is debiting non-current asset held for sale and crediting property, plant, and equipment for the said cost. A non-current asset held for sale shall be measured at lower of carrying amount or fair value less cost of disposal to sell, and any difference between the carrying amount and the fair value less cost of disposal to sell shall be considered as an impairment loss. And also, the non-current asset that is held for sale shall not be depreciated.
What do you mean by property idled or abandoned?
An idle or abandoned property shall not be classified as non-current asset held for sale because this is a non-current asset that shall be used until its economic life ends. So that's it, everyone. We hope you learned something from our low-cost budget accounting discussion about property, plant, and equipment that will not only help you in the post-test, but also in the long run. Keep the faith and do your part because you never know. You're already halfway there.